Hello, I am Vaibhavi. Today we are going to discuss Banking Regulation Act 1949, India. Banking Regulation Act 1949, India. The Banking Regulation Act of 1949 is a significant legislation in India that regulate banking firms in the country. Here are some key points about the Act. Objectives. The primary objectives of the Banking Regulation Act 1949 is to consolidate and aimed the law relating to banking in India and to provide for the regulation and supervision of banking activities to safeguard the interest of depositor and the stability of the banking system. Regulatory authority. The Act established the Reserve Bank of India as the central banking authority responsible for regulating and supervising banks and financial institutions in India. License of Bank. The Act empowers the RBI to issue license to banks and regulate their operations. It outlines the criteria and conditions for obtaining a banking license and the procedure for establishing and operating bank in India. Capital requirements. The Act set out the minimum capital requirements for banks to ensure their financial stability and solvency. Banks are required to maintain a certain level of capital adequacy ratio to cover their risk. Branch expansion. The Act regulates the opening of new branches by banks both within India and abroad. It lays down the procedures and conditions for branch expansion, including obtaining prior approval from the RBI. Management and governance. The Act establishes guidelines for the management and governance of banks, including the appointment of directors, board compensation, composition, and corporate governance practices. Regulation of banking operations. The Act empowers the RBI to regulate various aspects of banking operations, including lending practices, deposit taking activities, investment policies, and risk management. Enforcement and penalties. The Act provides for the enforcement of regulatory requirements and the imposition of penalties for non-compliance by banks. It empowers the RBI to take corrective actions such as imposing fines, suspending banking license, or initiating liquidation proceeding against non-compliant bank. Overall, the Banking Regulation Act 1949 plays a critical role in maintaining the stability and integrity of the banking system in India by providing a comprehensive framework for the regulation and supervision of banks. Thus, today we discuss about Banking Regulation Act 1949 India.